Hello everyone and welcome to the new market weather bulletin. Today is Monday, 27th of October, so time to check the Bitcoin chart, to map our levels and to make the plan for the week. So every week we try to keep updated on what's going on the market, and we try to have some plans for our trade, and trying to be as much as objective as possible. As always, if you enjoy these videos, make sure to subscribe to the channel, to leave a comment and a like, so it will help you will help me to grow the YouTube page. Also, if you enjoy this content, make sure to trade with me with Bluefin, as they are sponsoring all my YouTube videos. Bluefin is a super cool exchange, non KYC, so you don't need to share any personal information to trade on the platform, and you will enjoy a 20% discount on trading fee if you join with a referral link that you will find in the description below. But without further ado, let's move to the Bitcoin chart and try to make some sense of the current price action. As always, we try to start from the naked chart on high time frame, 12 hours or daily, to see what is going on. So on the, let's say, macro, without going too much on precise level, we can see that Bitcoin is still holding a sort of a bullish retest of this flipped level at around 108, 105. As you can see, or as you know, this level was for many months resistance. So very simply put, since we broke it above it this summer in July, we tested it several times. Even during the week, somehow the liquidation event, somehow we tested it. We kept testing it over the past 2 weeks, and we still bouncing from that level. A few considerations. A level, the more it's tested, the more it becomes weak. As you can see, for example, inverted on this resistance. So we tested this resistance, we tested again this resistance very many times, and at the end the resistance broke and we started to trade above. We can say inverted, we are testing this support many times, so we can have a sort of an assumption that this support is getting weaker and potentially we might deviate back and going down. But this is just a speculation, because as long as the level holds, we have to respect it. So in the case here of this support level, as long as this support level holds, we have to respect it. So is support until it's not, until it's broken. Just we have to be aware that if it's tested many times, it might become weaker. What does it mean? It means that longing further time this level might become more dangerous. So if you long it the first time, it was a little bit safer. If you long it the second time, it was still safe. Apparently the third and the fourth time still was safer. Probably the fifth time you have to be a little bit more careful. Just this as a general consideration. Not easy to give numbers or to say how many times it can be tested before broking and this kind of stuff. It's just something that you have to keep in the back of your mind, that this level is definitely being tested many times, and all those time has worked as a support level and has been provided somehow a bounce. So without entering too much in the discussion of what happens if that level is broken, until it's not broken, we consider it as a reliable level. But just from a range perspective, should this price action here ended up being a distribution, and this would ended up being a distribution when this famous level is broken, then in that case we assume this price action from July until the moment it could potentially break. I'm not making prediction, just preparing a potential scenario. In case this level break, we know that we are back in this old range we had from last year, from November 2024 until July, and in case we trade back inside this level, inside this range, then we open the scenario of a potential ranging environment back in this big range from 110 to 87, 80, 88. So from a range perspective, still the analysis is always the same. We are holding above this flipped level, and this level is holding, so we assume is still holding, and we are still giving several bullish retests of a flipped level. If it looks like a breakout, if it smells like a breakout, it's still to be considered a breakout. So we have to assume that we broke out. We have to assume that we are still ranging in this environment. That is the range we have been forming since July. So that specific range is that range, the new one, this one on the top, we are trading in since July, more or less. This one here is the range where we have to focus our attention, at least for the time being, and is the range we are interested to exploit. I'll avoid using tools or indicator. I'll just really try to explain with the naked chart as much as possible. So what we know that this range is holding. We know that it has been deviated on the top and has been deviated on the bottom, and we know that we are now trading in a place where plan should be made very carefully, and this basically mid-range. If you can see, this mid-range here is a very well respected level. When you determine range, you always have to consider three levels. One is range high, value area high, or resistance should be respected. In the case of this range, this level is well respected, as you can see. The other level that should be respected is range low. We can say is here where I put it, or we can say probably more accurate here. Let me move this here. Then we will use the tools, but let's use normal logic. We see that range low is also well respected. Establish, retest, sort of deviated, and still having relevance. But also the third level that should be monitored to have relevance on the range, so relevance means be respected, is mid-range. That in this case is more or less the level Bitcoin is trading right now, and you can see that is very well respected. So it was support, slice through, flipped again, support, broken down, become resistance, again resistance all here, finally broken down, once again resistance, and now we are trading back at that level. If you want to have the more clear range, mid-range purely from a price action perspective, you can use the parallel channel. We saw that more or less these are the level. If you take the first swing high, the first swing low, more or less, you will see that this mid-range is exactly where we are trading now. So what does it tell us trading at mid-range? That the main difference is that at range high, we are looking for swing short back to range low, while at range low, we look for swing long back at range high. Mid-range is a very choppy area. Why? Because in this level, we are building a fair value for the price. Why ranges are forming? Are forming because there is an indecision or there is an agreement, whatever you want to see it, on the price. So why price is ranging here? Because everybody or most of the market participants believe that this range high price is a too expensive price, so they are willing to go short or they're willing to sell, while market participants believe that this price here at range low is a cheap price, so they're willing either to buy or to close their short position. So in this case, whenever we visit range high, price tends to go back, and whenever we visit range low, price tends to push above. So these are the two levels of agreement, let's say, within buyers and sellers. Mid-range is, in this case, the purely fair price of the asset that is trading in the range. So this is the place where there is a most agreement within buyers and seller about the price. So everybody agrees that here in the middle for Bitcoin at 115 is a very fair price. Is a fair price and everybody is willing to buy and sell around this price, but there is an indecision. As you see, is chopped a lot. Why we create chop here? The chop, you have to understand the reason why price is behaving in this way is choppy because there is a lot of indecision. So there is not a strong buying or selling pressure at this level because everybody agrees that this is a fair value, is a fair price, is a good price. So it becomes a point of control where the price is attracted. And you will see in every range that this price is touched many times. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Probably another 10 times only here, 24 times, 25 times on the 12-hour time frames, 25 candles have been touching this level. So the difference within the extreme and the mid-range is exactly this, that while in the extremes there is a strong conviction to buy or to sell, range low to buy and range high to sell, at mid-range there is no conviction. Everybody agrees that is a good fair price, so nothing special happen, and this is a place where you also have to adapt and to trade according to what the chart is telling you. So this is not a place to have high conviction position or swing position, is mainly a place for scalping. So either you are a good scalper or either you are into low time frame trader, or you have to avoid as much as possible being chopped at this level, because this is a most choppy level where there is a fair value and where there is not strong determination about the price. So with these premises, we know that this is a level that probably will give some sort of reaction because it's a key level, but the reaction have to be treated as a potentially choppy reaction. So we might have some reaction, sweep, some reaction, similarly to what we have seen here, for example, or similar to what we see here with a strong rejection. But again, a level of where to be careful, where to be cautious, and not to make long-term plan. Where we want to make long-term plan, again, at the range extreme. What the previous price action is telling us that the last important decisive development was at range low, because we had this deviation here below. So since the last deviation was below the range, we expect the last manipulation, deviation, whatever you want to call it, before reclaiming the range was at the bottom of the range. We expect that potentially the price will go to the top of the range. Exactly as was our approach and philosophy here. There was a deviation, we accepted back in the range, we retested the range high, and where the price went to the other opposite of the range. So simply from a range perspective, we assume that since the lower part of the range was deviated, we have to assume that we might go, nothing is certain, nothing is sure, there is no confirmation whatsoever in trading, but we have to assume from a range perspective that after this sort of manipulation below the range, we might see range high. So main focus, at least at this moment, is to try to look for an entry that would bring us to that area. That swing entry should be searched for as far as possible from mid-range and as close as possible to range low. Very simple as that. Lower your RQ is a range. In a range, the business is this. Just scalping in the middle and looking for swing on the extremity. The extremity we are interested right now. Then if the price action will break above and go above, we will be back at range high. We will look for something else, but for the time being, as long as we stay at around mid-range And as long as we had the last strong manipulative move below the range, we are looking for entry to bring us there. We are sure that we will get a dip? No, but this is the interest we have. So if we get it, fine. If we don't get it, we'll adapt our bias, we'll adapt our interest. So how we do look for entries? We look for the potential demand. This is the last red candle before the 12-hour market structure break. We potentially add here, or we potentially add here, wherever you want to mark the last lower low. So as you can see, this was violated with an S&P, but still was violated. So this is the last red candle that created this 12-hour market structure break. We also do have another little level of interest, is this red candle and consolidation here. We could say that this is a demand, and the other one is more of an order block. So these are potentially very simple, just using price action to level of interest to look for a dip. The dip that we have explained would potentially bring us there if the range will continue to do what it does, that is ranging from range low to range high. We also use for further confluence the Fibonacci level that will give us more or less confluence on these two, order block and demand. Also, we can try to use our tools for the fixed range volume profile. We try to take more or less where we started to go sideways. We take the full range and we do get value area low, value area high, and you see that value area low is exactly on this demand. Now, what is happening here? It's happening the problem I was mentioning before, that this level, this support, this range low has been tested many times. So at least for my point of view, it's difficult, since probably this was the best entry we had over the last week to long again the range low. My view in this case, for this specific range, for this specific evolution that was a little bit long, lasting already 3 months and tested this level many times, I'm not so confident on putting bids blinding here. So what I would mainly look for is to map these two levels, the order block and the demand, and to wait for some structure to form. This I always explain this concept, but let me explain this once again. There is two ways to trade. Let's say in an uptrend you want to put a limit order at this level, because for your calculation there is demand, there is Fibonacci, whatever, you put a limit. Or you want to see more or less this level be visited, but you don't want to put bids nor blindly. You want to see the price action happening here. Once this price action happen, you wait for a little reversal in low time frame. Let's say this is the 12 hours that we are monitoring, and this is the 1 hour or the 4 hour. But after the level, let's say this level is visited, I want to see a little reaction in low time frame to place a better order or a better trade setup. Let's say it's more important the trade setup than the order. Why? Because if I have to put a blind bid either here or here, let me give you the two examples. My trade would look something like this. Now I'm making more for educational, let's say, purpose. This would look something like this, and this would look something like this, with a wide stop loss here or either below this low here, and this something first very wide, and second I have my concern because this level was tested many times, something very personal. While if we try to trade something more on low time frame, we would expect this level to be tested. We would have an initial bounce that let me show it better in low time frame. Price would come down somehow with a bearish structure, something like this. I will clean the chart so you will see it better. We will wait for a market structure break and we will try to enter on a retest. So we would expect the price to visit something like this. In a way like this, we wait for a market structure break. In this case, our setup would look something like this. Okay, so instead of having a swing trade just purely based on the 12-hour time frame and putting order in this way, for this specific case, then something again personal, I hope I explain why I don't feel confident to do it, I would prefer to trade the low time frame. Similar, if we don't get a market structure break while we are coming here to visit this price continue to go down without never breaking, then we wait for the same stuff down below and we apply the same concept. So what is my my approach here is to wait to see what the price does when they come to visit either one of these levels, so the order block where we also have the golden pocket, wait for a potential, not sure we'll get market structure break and trade something like this. Should the market not give a market structure break, bullish market structure break there, I would wait for the same, exactly same concept down at demand and more or less Fibonacci 0.75, again with the same concept of waiting the price to come down and give a market structure break and then take this kind of trade. As you can see, this kind of trade need more active participation, need more active monitoring on the market, but gave you a pretty different trade setup than the one I showed you before, where the stop loss is very wide. In this case, because this range has been exploited a lot, I prefer this sort of approach. Am I sure market will drop down here at 110, 108? Absolutely not. We can rip straight up, especially because equities look very strong, still crypto look lagging or very weak compare, but again, here at this level, I'm not interested on high time frame or swing positioning, but mainly for swing positioning, I'm liking more the level as close as possible to value area or low down here. I think this is everything for the swing trade. Wait a second because I will also explain my short position I opened today morning and the reasoning, but make sure that if you want to take any trade to do it together with me on Bluffin, you will find in the description below the referral link to enjoy a 20% discount on trading fee and to be eligible for the super cool campaign we are running with the Bluffin team. We are currently running this campaign where with the first deposit and the first future trade you will get some nice trading bonus. The campaign is valid until the 5th of November, so make sure to join me on Bluffin with the referral link in the description below to be eligible first for the lifetime 20% discount on trading fee and second for the very cool campaign we regularly run with the team. The one that you are seeing here is a super cool one that will get you up to $600 on trading bonus. Then let's go to the low time frame to explain the low time frame, let's say, or scalp position I took in the morning. We did have here a very important liquidity level. Simply by seeing the highs here, you can see that there was equal highs at this level. You can see that the price reached this level. It reached this level with a bearish divergence where we form higher highs and we fail to form higher highs on the on RSI. This was a key level, and especially this was a price action that was built up over the weekend. I think market more or less closed somewhere here. So all this move was during the weekend. Often Monday is a correction day. So this was an interesting level for me, especially after we got the sweep. There was a very low time frame market structure break that triggered my short. Now what I want to see to hold the short is, of course, this structure to continue to break further down. You can clearly see that there are two trouble area for the short, and one is this for two reasons. First, because it's a clear resistance level. It was a clear resistance level that now potentially could become support. Second, because there was this consolidation just here, kind of order block, that created the last impulsive move yesterday on Sunday. So this is the first big trouble area where I would take a considerable amount of profit at that level. Sorry, I deleted by mistake. That is just here. And the second trouble area for the short would be, again, very clearly on the chart, again, this resistance and this last consolidation. So the structure locally, you have to keep in mind that is bullish, clearly bullish going out. So this is a counter trade on low time frame trade, mainly based on a range or a resistance level. So in a counter trend trade, my approach to take profit is aggressive. So while if you are following the trend, you like to let your trade run as much as possible and surf the wave, in this case is locally a counter trend trade, so you have to be more aggressive because you are going against an established trend or against the market. But still, from a range perspective, you can clearly see that this deviation, in case this deviation on this sweep would open the door back to a range environment where we go back trading here. And on a time frame, you know that here down below we have our potential entry for the swing long. So not here to predict, more or less the level we had were down here. Not here to predict anything, just trying to react. This was a good place to try a scalp short. I already take some little profit, position is almost stop flat, and I will keep taking profit down the way if we break down. And at the beginning of the video you have seen where I would be interested for swing long. I think is everything for today. Hope I cover all the possibility scenarios and my bias and my approach going forward for the rest of the week, both in terms of the scalp short I have opened in this little range and in terms of potential swing long in this bigger range we have been trading since July. Is everything for today. As always, make sure to subscribe to the channel, leave a comment and a like, and make sure to trade with me on Bluefin using the referral link in the description below. Stay safe up there, and we'll see you in the next one. Bye.